Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 9th of May 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. Relatively quiet session on the global foreign exchanges. Nonetheless, there are still some key points to flag. First of all, pretty quiet overnight session for both euro dollar and cable, but there was a decent move in Aussie dollar, US dollar. However, possibly it wasn't the one that the market really wanted to see. The Australian dollar weakening and moving sub 70, below that key round number that the market has held on to so closely over recent months. The Aussie dollar falling by 0.19% and accentuating its weekly fall to 0.34%. We've bounced back from below 70 a couple of times in recent weeks, but this looks like it could be a meaningful break, so keep an eye on that one. Elsewhere, the Japanese yen was gaining ground against the US dollar and more importantly hanging on to those gains, up by 0.14% against the US currency overnight to trade at 109.94 shortly before we came on air. The weekly trend of 1.38% gains for the yen there being built up. The Chinese yuan, however, was moving in the opposite direction. The US dollar gaining against the Chinese currency, taking 0.35% off of the yuan overnight and bringing the dollar's weekly gains to 1.27% against that Chinese currency. The other mover overnight that's caught my eye, the South African rand weakening against the dollar, down by 0.29%. Against the US dollar, still up on the week for the moment, the rand, but on the back foot ahead of key election results that should start to trickle in later today after yesterday's voting. Okay, what's on the calendar? Events that may move the markets today. Well, it's a pretty packed calendar, as you can see. We've already had consumer price and producer price index data out of China this morning, and a little bit more on that later in the video. We also had consumer confidence index data for April out of Japan. And to come at 12:30 GMT, a big break in proceedings before we get some high impact data, but we'll start then in the US with producer price index data for the month of April, both month on month and year on year. That will be both inclusive and exclusive of food and energy. And at the same time, we'll get a look at the US trade balance data for the month of March, obviously highly topical given the ongoing trade negotiations between the US and China. At 12:30 as well, we'll have this week's read of continuing and initial jobless claims. The continuing claims for the week of the 26th of April, the initial jobless claims for the week of May the 3rd. And also at 12:30, there's a lot going on here. Jerome Powell, the Fed's chair, will begin a speech, one of 3 central banker speeches today. Stepping over the border into Canada at 12:30, we'll also have international merchandise trade for March, as well as a breakdown of exports and imports into and out of Canada for that same month. And if that wasn't enough data for you, you can also feast your eyes on new house price index data out of Canada for the month of March, both year on year and month over month. At 13:45, the second of our day's central banker speeches, and this from Fed member Bostic. At 1400, we will have wholesale inventories data for the month of March, a chance to look at how and what US companies have been stockpiling, if anything, over recent months. At 14:30, we stay in the States for the EIA natural gas storage change for the week of May the 3rd. And then at 15:30, we get a 4-week bill auction out of the US and a 30-year bond auction, I should say, to follow on from that. At 17:15, Fed member Evans concludes the central bank speeches today. And then we pause again until 23:30 and cross over the Pacific to Japan for the release of labour cash earnings for the month of March, overall household spending also for March, the Bank of Japan's summary of opinions, a look at how the MPC there voted and feels about the future path of Japanese interest rates and monetary policy, and finally at 23:50, the foreign investment in Japan stocks and bonds for the week of April 26. Okay then, breaking news and comment that's caught my eye overnight. And first of all then, China's CPI rose to a 6-month high in April, driven by higher food prices, largely pork, on the back of the outbreak of African swine fever amongst Chinese pig herds. Producer price index or factory gate inflation in China also moved to a 4-month high as well. So signs that demand might be picking up there across certain sections of the Chinese economy. Meanwhile, a US government 10-year bond auction yesterday drew fewer bids than normal and was described as very weak by analysts on the back of that. The offer was still oversubscribed, but nonetheless not to the degree, I should say, perhaps, that we'd expect from US bond markets, and that might just hint at the market's concern over Donald Trump's most recent actions around the China trade negotiations. In fact, Mr. Trump was at it again, if I can put it last night, when he said at a rally that China had broken the trade deal. The president blamed China for recent difficulties in negotiating a deal. Talks are due to begin again today in Washington, but obviously it's a very fractious climate and hard to see how anything can be concluded this week. Meanwhile, EU leaders are gathering for a summit in Sibiu, Romania, with climate change high on the agenda, and calls for as much as 25% of the bloc's budget to be spent combating it. Now, that's interesting, isn't it? Because I've been talking about the need for some kind of fiscal stimulus from the EU to replace a QE that was abandoned at the end of 2018. Perhaps climate change could be the subject of that fiscal stimulus and a topic that EU leaders could rally behind. We'll see. Okay then, food for thought and something to take away with you into the trading day and beyond, and why not think about this? HSBC has updated its economic surprise indices, but there wasn't too much to cheer about here. You can see the table over here, and we'll come to that in a moment. Toronto Dominion, or TD Bank, also wrote on macro data, and it noted that hard data such as GDP is consistently beating sub-survey data such as the global PMIs. G7 GDP is one of the few upward black arrows on the chart opposite. You can see that here. I've highlighted it in the red box. But the reasons for the outperformance of hard versus soft data are not obvious to those of us in the market. Now, this is not a new observation, as it's been in the mix and commented on for about 3 or 4 months. But the fact is that this trend or divergence between the soft and hard data, and the fact that it's persisting, is something of a quandary. So it's certainly something to keep an eye on. As you can see in the table here, the vast majority of arrows are downward and therefore negative as far as economic surprise is concerned. There are a few bright spots. Australia has been one, as I say, G7 GDP has been another, but they're few and far between. Industrial production picking up in Southeast Asia, for instance, but they are slim pickings, and that's certainly something for us to talk about over the weeks and months to come, I'm sure. Okay, it's risk warning time. Please do take the time to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're not sure about those risks or the suitability of leverage products for you, then please do consult your Pepperstone account representative, and as I say, do take the time to read this risk warning thoroughly. Thank you for your time today.